12:30 p.m. only on Bloomberg Quint.
Thanks for tuning into Countdown. It's a flattish afternoon of trade. My name is Neeraj Shah, and as I said, 11,880, so hardly any movement on the Nifty. In fact, the Bank Nifty has come off after starting off the day about 0.9 or 1% higher, which was around this time at the start of the trading day when it was up about 1% or nearly 1%. I think it's come off quite completely, and it's now trading in the red territory, trading in or around the lowest point of the day. I reckon that the market breadth too would have just cooled off a little bit, and mid caps and the small caps too would have looked slightly wobbly. So 2:1 in favor of the declines. Now we've been used to seeing these kind of days. Frankly, the last few, the market breadth has been a bit adverse, and well, maybe with reason. Let's bring up the heat map and show you what's moving on the index firstly. Even Stevens, not an overwhelming green, which was the case at the start of the trading day. Yes Bank corrects. Some of the crude derivatives or crude sensitives, the likes of BPCL, IOC, etc., correct in the session today. I think everything which has got that oil and gas flavor on the account of the Norwegian fund possibility of selling coming in is down. So ONGC is down, Coal India is down, GAIL is down. Anything with that flavor has certainly looked wobbly in the session today. And Z Entertainment and Dish TV also look slightly weak. What's done well? Britannia 3% higher. IT's come back with the bang, so good going for Tech Mahindra, Infosys, TCS, all three in the green. Wipro marginally in the green as well. A bit of a defensive nature of the market in the session today. Be interesting to see what the FI flows look like at the end of the trading day today. Just very quickly bring up what's happening at the broader end of the spectrum too. So the mid cap and the small cap, and let's pull up what the MRR function indicates. What's done well? Some gains for Diwan Housing after they paid part of the monies that they had to pay on Friday. Muthoot Finance has some gains, as does Manappuram Finance. Some gains for Mahanagar Gas and Coromandel International. What's not done well? ADAG, Reliance Infrastructure down 13%, Reliance Capital 9.5%. Dilip Buildcon corrects another 9%. It was down about 5% apiece for the last few days. Now the circuit limit opens up, and Reliance Power 2 about 8.5% lower in trade. Quest Corp continues to trade lower at 52-week lows. Similarly, for the broader end of the spectrum, the small cap index strides 3% higher. Himadri about a couple of percentage points. Look at the losers though. Chain Irrigation down 10%. Deepak Nitrite has been hit today by this article in the Economic Times about the spreads. So that one is down about 8%, and Delta Corp corrects about 3.5% in trade. So the broader markets have a bit of a spot of bother in the session today. But what's happening to the more liquid universe? Navneet, how is the setup looking like?
Well, Neeraj, if you look at the futures side, at least the index futures, Nifty as well as Bank Nifty futures, they've not seen any major build-up at least last week. And today also, as we speak, markets are off the opening levels. Nifty is, I think, gyrated about 90 to 100 points in trade. Only 3% higher when it comes to Nifty June futures. And look at that, premium has shrunk from those levels of 30 to now almost 4 to 5 points. And Bank Nifty June futures are trading at a discount vis-a-vis premium, which was there towards the end on Friday's session. So discount is nearly about 18 to 19 points, but some bit of open interest addition definitely seen when it comes to Bank Nifty futures. These could also be the intraday position. We'll have to wait for the final data. But volatility index, which was inching lower. In fact, this morning also when markets open higher, VIX was down. We had seen levels of about 13.6, but from thereabouts, volatility has increased as the markets have come off the highs. So 3% higher for India VIX at about 15.3. Options data, if you look at that, though the maximum open interest concentration remains the same. same, 12,000 call, 11,800 put. So 200 point is the range that we've been talking about. But look at the picture in terms of open interest action with regard to individual strike. When we started the day in the first half, there was unwinding for majority of the call strikes starting from 11,800 right till 12,000. But in the second half of the session, as the markets have come off, we've seen more of call writing coming in the system, and you've seen call writing at levels of about 11,900 and also 12,000 strike. On the put side, major addition so far has been seen at 11,900, which has added about 8.5 lakh shares as we speak. And on the downside, I think one can watch out for Friday's low. That's what the technical experts have been mentioning, which could act as a support, which was somewhere about 11,769. Stock specific, 2 stocks on the long and 2 on the short side I want to highlight. On the long side, you've got Manappuram Finance. This has been an outperformer on YTD basis. Remember, the stock was down last week because of some news reports. But from those lower levels, there's been buying emerging here. And not only on the cash side, look at the futures. Open interest is up 21 to 22%, telling you that the long positions are being witnessed here. And the other one is Bata. Significant surge has been seen when it comes to the open interest of this counter. The stock's trading just 4% away, by the way, from its all-time high level. So good going for Bata India. On the short side, you've got stocks like Jain Irrigation hitting fresh 52-week low almost every day, and shorting seen on the futures side. Stocks down, by the way, 11 to 12% in today's session. So aggressive shorting seen here. And the other one from the ADAG pack is Reliance Capital. The stock was down almost 18% last week. The start to this new week has also not been great. It's down about 8 to 9%. Shorting continues for this one. Open interest up about 17 to 18%. Also want to highlight, if you look at the total open interest as a percentage of market-wide position limit on Friday, was somewhere about closer to 90s. And the sort of shorting that one is seeing in the system today, likely candidate for entering into the ban period for tomorrow's session, Neeraj.
Well, let's wait and watch what happens to some of these names over the course of the next 1.5 hours and arguably tomorrow as well. But let's begin this show with a voice on the global arena. Jason Dow, he's the head of emerging market strategy at SocGen, joins us right now on the show. Jason, good having you. Thanks so much for joining in. I think the biggest question in the minds of almost every investor seems to be that in light of what's happening between US and China, what does the rest of the emerging market pack do? Does that risk off envelope them as well? Or would some of them fundamentally emerge stronger and therefore might see investor interest? What's your thesis?
Yeah, no, it's a very good question, and it's something that we're debating very actively internally and with investors. I think, very simplistically, the tariffs that have been imposed, if they continue going forward, or if there's further escalation, is negative for global growth. We know it's negative for China, we know it's negative for the US, and these are the worries that are starting to surface in the market. From the very short term, I would say, if you're looking at the next 6 months, the next 1 year, even slightly beyond that, I don't think that there's anybody that's really a true beneficiary to some of the problems that we're seeing with global trade. As we move further into the future, there is going to be the possibility that multinational companies are going to look elsewhere other than China to set up their manufacturing activities. But that's a very long-term process, and it's not something that really benefits any emerging market in the very initial instance.
Jason, what do you put out in terms of your advice when people ask you about how to approach investing in the current scenario? Because I think EMs are chalk and cheese. Some are trading near recent highs, some are not. China is certainly not. It's in the epicenter of the trade war. And the ones which are trading in or around new highs have valuations which, in a lot of people's thoughts, are prohibitively expensive.
I do agree. There has been quite a bit of dispersion in the EM currency market over the recent past. So you see countries like North Asia, for instance, Korea near its weakest level, China near its weakest level, as you mentioned, where there's some other currencies, let's say such like India or Indonesia, which have held in much better at this point. And I think that is a reflection of the countries that are the most hurt at the very, very beginning are countries that are very export-oriented, very linked into the Chinese supply chain, and also very linked into tech. So those countries have been the first mover. Countries like India, Indonesia Their export structure is different. The importance of exports to the overall economy there is somewhat smaller than the North Asian countries. So there has been this type of dispersion. But I'm a firm believer that, over months and quarters, if we are going into a U.S. recession like the market is starting to consider at this point, and growth momentum is going to be lower and people are going to be worried about the tail risks, I don't think that anybody in the emerging market currency space emerges as a winner in that scenario. So there are some countries that are stronger at this point, but they could probably play catch up over the next year.
Jason, after the non-farm payroll data came in from US on Friday, which was way below what the street was expecting. In fact, the number came in below 100,000 mark as well. And now, in light of that data, the chances of rate cut by Fed have only gone higher in the month of June. So let's say if the rate cut comes about, how do you see the fund flow shaping up? And you were talking about the currency market. How do you see that impacting the emerging market currencies?
Yeah, a quick policy response by the Fed is going to be helpful as far as stabilizing sentiment. But I do think the one thing that we have to keep in mind at this point, the aggressiveness of what the market is priced for the Fed usually means that a recession is actually very close. So it's maybe not that they would be taking preemptive action. So as the Fed starts to ease, if they do it in a very short period of time, like the market's starting to gravitate towards, it can help stabilize a little bit. But I still think when you're trying to trade off what's happening on the rate side in the US, it's okay for fixed income in emerging markets, at least in the initial instance. But I don't think that it's actually going to be positive for the currency market.
In light of...
I think at best you have a situation where...
Please go ahead, Jason, complete your point.
No, I was going to say, in the best case scenario, EM currencies are stable rather than appreciating, because I do think, in addition to the impact from negative growth, there's, two other factors I think that are, weighing on the ability of EM FX as an asset class to do well over the medium term. And other than growth, it's also on the positioning side, maybe not so much in a currency like India on fixed income, but in the vast majority of EM, there's been a very substantial amount of bond inflows that have come into these countries over the past 10 years, and investors are generally overweight their benchmarks. The third point is that when you look at emerging markets as a group, the spread that investors are getting relative to US Treasuries, or the yield pickup in emerging markets, is actually relatively small over the past 10 years. So the attractiveness of EM from a yield pickup standpoint is also not, is not working in emerging markets' favor.
The one factor that will aid all of sentiment, even if there was a bit of a global pull off, is crude coming off. Now, this morning we had somebody from Morgan Stanley saying that instead of looking purely at crude and its impact, or looking at crude in isolation, look at crude and other commodities, and if all of them were to cool off, then it probably helps an importing nation like India. How closely do you look at India? How do you closely look at Indian macros and Indian equity markets, if you do? And what are your thoughts thereof?
I think, the oil question and how that relates to emerging markets, I think is very, very interesting, because what we saw prior to, let's say, 1-2 years ago, was that typically when you had oil prices increase a lot, that was good for EM. It was even good for EM currencies that were importers of oil. When oil prices fell, it was generally negative for emerging markets, even when the country was an importer of oil. So prior to 2 years ago, the picture for oil, it seemed to be that the signals we were getting from price were much more demand-driven type of signals. So if oil is going up because of demand or going down because of demand, and that's a reflection of what's happening in the global economy, that is what tended to move currencies over that period. Over the past year or so, it seems like maybe supply has been a greater issue. And if oil is coming off because of supply rather than demand, then that can be beneficial for a country like India that has high oil importing needs.
Okay, Jason, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts.
Okay, you're very welcome.
That's it from Jason Dow of SocGen with his thoughts on EM currencies in particular and what happens in the light of what happens to the EM pack in the light of the US-China war and if it were to escalate. Well, there are two things that are talking points. One is what's happening to the US-China trade war. The other is what's happening in England and the Cricket World Cup, which is in full swing. And on similar lines, IIFL Securities has come out with a note with a list of 11 stocks that can be potential winners over the long term, substituting the 11 players in a cricket team. Let's find out which stocks have made it to the list and why so with Ayon Mukhopadhyay. He's the head of institutional equities at IIFL Securities. Ayon, good having you. Thanks so much for joining in. I hope I'm pronouncing your name correctly, Ayon.
Oh, it's fine. It's actually Ayon, but it's fine. Good afternoon, everyone.
Okay, thanks so much. So tell us, it's an interesting concept, having a dream team. How did you go about choosing these 11 stocks out of what? 4,500 odd listed stocks on the NSE?
Well, no, it was like selecting a team. It was like putting a selector hat and then waiting to see who the captain of the team would be. Right after the elections, we knew the captain cum coach of the team would be Prime Minister Modi, and based on that, we selected a team for the conditions, and the conditions were conducive to attacking stroke play and making good returns over the next few years. And based on that, choosing a balanced team of who would get you off the mark with some high beta players, and then some all-rounders to consolidate your portfolio, and then which I call as the bowlers, which will hold on if the situations get tough. So it was a bit of selecting a sort of a portfolio of stocks in the cricketing team, getting into the mood of the cricket that is going on, and trying to see that which would be giving you a sort of a sure shot winning combination.
This is what I mean. So the way the World Cup comes once in 4 years, is this team chosen with a view of holding it for the next 4 years or longer?
Yes, it is a long-term oriented portfolio. It is definitely not just for 1 month like the World Cup. It is something that is geared for a long-term portfolio. It is definitely geared, but of course there are certain stocks. The way the portfolio, or rather the way the team has been chosen, I will not call it a portfolio. The way the team has been chosen is there are stocks there which will give you high returns, might give you high returns in a very short period of time. Which are cyclically oriented, but there are also some stocks which are more geared for the long term. So it's a mix and match in that concern. But yes, overall, this combination of team is more for the long haul, and maybe till the next World Cup, or as I call it, for this duration of the government.
Hi, Ayan. Good afternoon to you. Let's say if somebody buys your dream team right now, and you said it's a long-term portfolio, long-term horizon of about 4 years, what's the sort of growth rate one can expect from this dream team then?
Oh, well, that's a very difficult question to answer, but I think it should definitely outperform the market. That's where our hope is. And it should definitely outperform the market. And again, these are most of them are growth-oriented stocks, and it's very difficult to put an exact number to it. But it's something that there definitely would be a winning combination. Let me put it that way.
Okay, let's talk about the individual team members of your dream team, and one of them is Gujarat Gas, which you've titled as a batsman. This is a company I think the street has been betting on in light of the ban that one has seen in the Morbi region of Gujarat, where there can be more of demand for gas as the coal gasifiers have been banned. So tell us what's the rationale behind it, and what sort of growth are you expecting from a company like Gujarat Gas, where volume growth can pick up going ahead?
Yes, the volume growth here is the key driver. Also, it has got license in 40 regions. So basically, and also if you see the CNG market here itself, it will not face that much of a regulatory challenges as the other utility providers here. So here, obviously, the EPS should pick up significantly over the next 2 to 3 years. Again, the stock has done well in the last 6 months, as you have been saying, but we feel this is just the beginning of its dream run. And over the next 2 to 3 years, the EPS should potentially double. So it's done in the good work. That there's regulatory challenges are low. Given its growth potential, I think this is sure shot winner.
Okay. So by the way, viewers, keep in mind L&T, SBI and HDFC Bank are the number 1, number 2 and number 3 in their team. Gujarat Gas is the number 4 batsman, as the report suggests. Any risks to your assumptions turning out to be true, Oyong?
Sorry, on any of the particular...
No, on Gujarat Gas,
on
Gujarat Gas, on Gujarat Gas.
Means you're saying with any of the assumptions turning true? Means the thing is, yes.
No, I mean any risks, any risks to these assumptions that you've made.
On the CNG side, the risk is there. If the prices go up, or if there's any regulatory risk that comes in, those are of course the risk always there. In any utility player, those are the biggest risks, of course. But apart from that, there should not be any. Yeah.
Okay. The next batsman in your team is Deepak Nitrite. Now, usually one would have been happy with it, but in today's session, the stock is down 8%. There was some newspaper report which spoke about how the spreads have corrected and therefore it will be a very big negative for Deepak Nitrite. What are your thoughts, firstly, on choosing this stock? And then if you can comment on the spreads as well and the near-term weakness that we're seeing.
Okay, but the reason for choosing this stock again has been it's a fantastic growth profile. The stock has got fantastic growth profile. Again, this is a stock which is very, very cheap on 1 year forward earnings. The stock consistently has been delivering over the last 1 year. So again, we believe this is a stock where the EPS will double in the next 1 year or so. And again, on that basis, again, the stock is very, very cheap. And the concerns, yes, is there. Or today, the concern that you said, concerns like this are there on any companies which have this side of a balance sheet. These kind of concerns will pop up, which are unfortunate. And these are so this is a high risk, high reward stock in bank. That's why in the cricket terminology, this is my number 6 or late order batsman. Let me put it that way. It's a late order batsman who will come in and it can give you that high, the quick runs as they say. But there is amount of risk also in holding it. But given that the valuations are where they are, I believe the risk reward is more in our favor here.
Well, number 5 on that list. Then the 2 all-rounders in the IIFL's Dream Team include Reliance Industries. I need not specify too much on that. The interesting choice, though, is Tata Global Beverages. Now, again, the question stems on that. Why Tata Global? It's largely been, over a 10-year period, a bit of an underperformer. It's had these bouts of outperformance, which also have gotten sold into. What convinces you about Tata Global?
I think the recent change has made, and that is the reason I called it an all-rounder also right now. I think now the Tata management has clearly identified Tata Global to be its consumer flagship. So you've seen that with its with this merger with Tata Chemicals, and that will add a lot of synergies to it. And the Tata Group for long has been trying to identify what would be its vehicle to get into the consumer business. Now, if the Tata Group really considers Tata Global as its flagship company to foray into the consumer business, this will be a truly all-rounder, and the stock could re-rate significantly from where it is now. So that is what I have bet on this company to be, that it could relay the synergies coming in with these mergers, could be the flagship company of the Tata company in the consumer space and relay significantly from here.
Okay, Tata Global Beverages definitely outperforming when it comes to the stock price movement. In the last 2 months, it has given you positive returns, especially after the announcement of merging the consumer business of Tata Chemical with Tata Global Beverages. Your wicket keeper, Ayon, is ICICI Lombard, and a lot of analysts on the street are now betting on the insurance space. Why ICICI Lombard compared to the others?
Well, we could actually have chosen any other insurance player also, to be honest. Means, if I had a reserve wicketkeeper in my team, probably SBI Life would have been my reserve wicketkeeper. But I believe I chose a little bit more safer option, and I believe general insurance is slightly more safer than life insurance. And there's no particular reason for that, but I believe that ICICI Lombard is a very, very well-run company. There is a lot of regulatory tailwinds that this sector is enjoying. And in that way, the stock has done well, no doubt about that. The stock has done well, but I say slow more about that. But as I said, I'm equally bullish or sanguine over the life insurance companies also. And if I had a reserve wicketkeeper, I probably would have chosen SBI Life in that space.
Okay. Well, the next set of bowlers are largely financial names, and two slightly divergent names. One is the stable, rock-steady Bajaj Finance. The other one is a company that is coming up thick and fast, but not quite in the same league, RBL Bank. Why do you like these names, Ayong?
Well, Bajaj Finance, I think it speaks for itself, and as I've written in my report, it's been a complete outlier. And again, in cricket terminology, like if you look at its peers, its cohorts, which has been absolutely carted all around the park in an environment where NBFCs have not had the best of circumstances. Let me put it just that way. This guy just keeps consistently hitting the line and length and performing. And it deserves its rich valuations, and these rich valuations are to continue because of its sheer performance. So and that will be my rock in the bowling department to protect my portfolio if there is any untoward situations. And this stock, given that it has continuously performed, there is no risk to it. RBL, yes, you're right. It is an interesting choice. It's getting into the big leagues, and I believe that it is marching towards much higher ROEs and ROAs from this point of time. Again, a very, very well run company, and I do believe that it could get into the big boys leagues very, very soon.
Okay, so that's on Bajaj Finance as well as RBL Bank. Most of these companies are reasonably well proven and therefore nothing too dramatic. Is there a dark horse within these companies where you are reasonably confident, maybe not as confident as an HDFC and a Reliance, but the returns could be multiple times if it indeed either bats well or bowls well?
I think, the thing is, apart from the very, very well-known names, I think, my X-Factor stocks definitely will be Gujarat Gas and Deepak Nitrite. They will be my X-Factor stocks, along with SBI. I think I'd right at the top. Though SBI is becoming a consensus buy. But I think these are the stocks which are not only in the growth zone, but also in the value zone. So let me, out of these three names could be the ones that are not just consistent, but could be the X-Factor and, push your target beyond the 350 mark. Let me put it that way in the cricket terminology.
Okay, well, interesting conversation. Ayong, thank you so much for taking the time out and speaking to us today. Have a great day ahead.
Okay, thank you. Always a pleasure. Thank you so much.
That's the view from IIFL. A bit of a dream team that they've put up. I must say the dream team has had a small accident today with Deepak Nitrite doing what it is doing. But aside of that, interesting choice of names there. Well, let's put the spotlight away from cricket into gold financing companies and how both Manappuram and Muthoot Finance are not just up today, but have seen a stellar run this year, and foreign investors too are lapping up both of these stocks. Navneet, why are we talking about them?
Well, Neeraj, we've been talking about the NBFC space, and now that has been hit because of the liquidity crisis post IIFL issue. But these two companies are part of NBFC, but they've been outperforming on year-to-date basis, even if you look at the returns. So just first, let me tell you the outperformance. Manappuram Finance is up about 48%, and Muthoot Finance is up about 23%. And let me also tell you, both these two stocks have been trading around their all-time high levels, which were touched in this particular month. Besides that, what is the reason? I'll come to that. But one other factor that has been observed is in the last 3 quarters, the FPIs have been increasing stake in both these companies. So if you look at Muthoot Finance, in June 2018 quarter, the FPI stake was about 9.8%. And after that, in September quarter, it went up to about 10.1, a meager increase of about 11. And finally, as per the last exchange filing of March 2019, the FPI holding is at about 12.3. And remember, promoter holding in Muthoot Finance is at about 73.5. So liquidity could be FPI and free float in the market is just about closer to 26 to 27%. Whereas contrast, Manappuram promoter holding is about nearly 34%. Look at the June 2018 shareholding of FPIs. It was about 37.8. In September quarter, it went up to about 38, and in December 39. And finally, March 2019, as per the latest exchange filing, it is at about 44. Now remember, RBI mandated limit for FPIs in Manappuram Finance is at about 49. So let's see if that gets breached or not going ahead. What's causing the rally in both these two stocks? First is broking community definitely seems to be bullish on this one. So if you look at Manappuram Finance, almost 72% of the brokers are bullish. So that's about 8 brokers who are bullish on this one. Only 3 have hold, and none of them have a sell rating. And the consensus 12-month target price is at about 140, and the stock's trading around those levels of about 138. So broking community is bullish on this one. Muthoot will also come up on your screen, and the picture is just same. No broker has a sell rating on this stock as well. 8 of them have a buy, two of them have a hold. And if you look at the 12-month consensus price is at about 668, and the current price is just about 636. Now coming to the factors, what have led to the rally that one has seen in these two stocks. Now both these gold finance companies, if you compare them to the other NBFC, the tenor is very less compared to NBFC. So if you look at Manappuram Finance, their gold loan range is about 95% of the portfolio is about 3 months, whereas if you look at Muthoot, it's hovering between 6 to 12 months. Now, because of this, their asset liability situation is positive compared to the other companies in the same space, because they've been focusing on shorter tenor products, which have actually enabled them to have a stable funding lines despite of the liquidity crunch that the NBFC space has seen. And also the quarter 3 numbers, the AUM growth has been quite good for Manappuram, 23% on YOY. Sequentially, there was a growth of 9%. And what was outperforming in the fourth quarter for this company was there was a degrowth in the gold loan portfolio in the third quarter, but in the fourth quarter that grew by about 3%. And similar as the case for Muthoot, the AUM growth has been quite strong for this one, about 6%. And the last 4-quarter average before this quarter was just about 3.4%. So AUM growth was strong, and the company is also given you good guidance going ahead for FY20 of about 15%. Coming to valuations then, if you were seeing which one has a valuation comfort, none of them, because the valuations are just about the same. Price to book of both these companies is at about 2.2 to 2.1. In fact, we'd done a story, Shefali Malik, who tracks this sector pretty closely, had done a story on April 23rd indicating why these two companies have been outperforming, and there was buying seen in both these stocks right from September 28 till now.
Well, the stocks have certainly done well. Let's figure out how much more with our experts, and not just these two stocks, but the markets at large. Sumeet Bagadia of Choice Broking Johnson. In a bit, Hemen Kapadia will be with us. But before we get to markets at large, Sumeet, thanks much for joining in. Since we're in the topic of Manappuram and Muthoot, both of them have done reasonably well today. How do they look on the charts?
Hi, good afternoon. Well, as far as the question Manappuram and Muthoot is concerned, Manappuram is looking good to me. In last couple of weeks, we have seen that the stock has given a very good up move. Now, looking at the chart, it seems that the same upside move can continue, and from here on, there is a possibility that we might see a move till 142 levels. That should be the immediate target for a trading perspective. Once 142 is taken away convincingly on closing basis, we can see a move till 150 or 155 levels also. The overall structure is looking the overall structure of stock is looking good on charts. So any long positions at those who have taken at low levels, they should hold on their positions with their trailing stop losses to be placed at around 132 levels for the upside target of 142 and then 150 levels. At the same time, Muthoot Finance, the stock is also looking good to me. From here on, there is a possibility that we can see a move till 650. That should be the immediate target. A closing above 650 will take stock prices to 700 levels in next 2 to 3 months time horizon. So for a trading perspective, one can initiate long positions in Muthoot at the current market price with a trading stop loss to be placed at 612 or 615 on the lower side.
Okay. Let's now shift focus to the markets. Sumeet, your Nifty strategy or the Bank Nifty strategy for the day. What are you trading today?
We have given a buy call in Nifty and Bank Nifty. Nifty is currently quoting at around 11,900 levels. If there is a dip of around 20 to 30 points from present levels, then that should be used as a buying opportunity. Downside, the major support for Nifty is placed at around 11,800 levels. So that should be the stop loss for long positions. And on higher side, one can expect targets of around 12,000. That should be the immediate target. Once we see breakout and closing about 12,000 levels, we can see an extended move till 12,100 or 12,200 levels. But immediately for a trading perspective, 12,000 should be the target, and downside the stop loss should be placed at around 11,800 levels. On the other side, Bank Nifty is also looking good to me. Any dip in Bank Nifty from present levels till 3,800 should be used as buying opportunity. It's presently quoting at around 31,000 levels. Downside, the support for Bank Nifty is placed at around 3,600 or 3,700 levels. And on higher side, the immediate target for Bank Nifty is 31,200. Once the levels are taken away, we can see move till 31,400 levels also.
Okay. Hemen Kapadia with his thoughts. Hemen, thanks much for joining in. What's the view on the index?
Thank you for having me, Neeraj. I think we are stagnating. We are overbought, but we probably going to come closer to 12,000 once. Some of the daily mechanical indicators, like the MACD, signaled a sell, Neeraj. So making a new high seems, I don't see that happening. I have a strangle to sell 12.3, 11.5. I don't think it goes above or below. If and when after this bounce we don't make a new high and we slip below 11.8, I think that's where we'll see pressure coming in, and possibly we've had this open gap, Neeraj, on the Nifty post the exit poll results 11.591, 11.426. I think if and when 11.8 breaks in terms of closing, I think that's where the Nifty could make an attempt to cover up the gap. So I'd say it's top heavy. I don't expect too much of an upside. Currently, yeah, this could spill over to tomorrow, but yeah, I don't see a new high coming in the next 10 days.
Any option strategy?
Yeah, I'm selling the 12,300 call and 11,500 put now.
Okay, so Hemen's basically betting on the range that we've been talking about. In fact, 11,500 put for the monthly expiry has maximum open interest. Let's get you some stock specific ideas going. Hemen, I'll come back to you in terms of stocks. What are you betting on this afternoon?
I think Motherson Sumi has been battered down badly, Navneet, and there is positive divergence. Some of the oscillators have given crossover buys. Volumes have been picking up at lower levels. So I have a buy on Motherson Sumi at 119, stop loss 116, target 105. And secondly, I have a positional sell call on UPL. UPL is getting top heavy, and I think that the distribution pattern going on. Upside appears capped, but maybe it could hang around for a few days. Sell at 1020, stop loss 1035, target 990, which is slightly modest. I think we could go down further, but the technical confirmations aren't yet in place. I'm anticipating some of the reversals.
Okay, Sumeet, your stock specific ideas on Motherson Sumi, I guess, features in your list too.
Absolutely right. I have two stocks for the day. The first one is Motherson Sumi and second one is Tech Mahindra. Motherson Sumi looks good to me. After a long time, we have seen that the stock has given good move today. We have seen a good price action today, and looking at the chart, it seems that the stock can give good move in next couple of days. For a trading perspective, one can initiate long positions in Motherson Sumi at the current market price, with a stop loss to be placed at 114 on lower side for the upside target of 125 and 128 in next couple of days. The second stock for the day is from IT space, and that is Tech Mahindra. After a correction, it has given a good upside move in last 2 to 3 days time horizon. It has been sustaining above 200 DMA levels, and it has broken the recent swing highs. Looking at the chart, it seems that from here on we can see upside move in the counter, in which we can see levels of around 780 as an immediate target, and overall we are expecting Tech Mahindra to move up till 800 levels. So for a trading perspective, one can initiate long positions in Tech Mahindra at the current market price, with a stop loss to be placed at 750 on lower side for the upside target of 780 and 800 levels.
Okay. Let's get in a fundamental voice on the show. Sumeet Kalra, Target Investing with us. Good afternoon, Sumeet. Thanks so much for joining in. I want to start off with what's been the sector of the day, at least in terms of news flow. Banks, NBFCs.
Yep.
I think almost everybody said that their view doesn't change too much. Your view on any particular stock, any particular subset within this theme as a result of what happened on Friday?
So I think the power book of all these PSU banks gets a little breather in the whole circular. And if you see before the Feb 12th circular, the power sector was the main stress worry for everyone when the circular started coming to hit. And now you had a lot of resolutions in plan, but because of it being withdrawn, banks couldn't figure out how to take an initiative reaction towards, either to take an equity and how to blend it out. So I think now they have a clearer path of how they can execute the resolution plan. and if and when that solution comes out, and whether even they want to take it to IBC or not. Because if you see, Bank of Baroda has already put IBC cases on the block now because of the resolution getting delayed. So that also disappointment is coming from the banks as well. So I think this will be better off. I think PFC will be one of the biggest beneficiaries.
Power Finance Corporation.
Yeah, because I feel they were the main problem. They were having the main problem of NPA recognition due to the circular. And for them, that was the biggest worry, especially after REC kicking in, and the recognition might go up in a couple of quarters or something. And even they were waiting for this kind of a solution to come out. So I think PFC might be the biggest beneficiary out of it. Then you already have a SBI. But I think for SBI, it doesn't matter much because the book is still decent and the recognition has been more proactive.
Okay. What about ADAG? And my question is, do you reckon that any kind of bounce in a Reliance Infra, Reliance Capital should be sold into? Do you see them, because of the auditor's comments, that they find the group, concerns on the group continuing as a going concern in the future? So do you find or believe that any kind of bounces should be sold into?
So I think any or every bounce which you get, which I think will be very hardly to come by, especially when a lot of stocks are getting out of the derivative section as well. So I think it's better to get out at even these levels, because I don't see any upside from here. Bounces can be, a missed opportunity to sell at a higher price, but it doesn't make that, because if you see Reliance Cap, right? Everyone was hoping that Reliance Cap is the better of the whole lot. But eventually that also by price and stock price and fundamentals got dragged down. Because if you see the related parties, 30 to 40% of book is financed to the group. So if the group itself is falling out, Reliance Capital cannot be isolated event and stay in a better shape. So I think even at 88, 87, whatever the current price is going down, I feel it's a good place to get out. At least you don't have directly a bad news coming out from there, which I think can come in near term.
Okay, that's the view coming in on the ADAG pack. Reliance Capital, by the way, down almost 9% in trade, and we highlighted there is a lot of shorting on the future side which has taken place for this counter. It was down nearly 18 to 9% last week as well. All right, talking about the banking pack, Jammu and Kashmir Bank has replaced its chairman on the order of the state government. While it's not the first such occurrence at the state-owned lender, Shefali Malik joins us with more details on that. Shefali, over to you.
Well, yes, on Saturday, the bank put out a release saying that the state government has actually ordered removal of the ex-chairman, Mr. Parvez Ahmed, and has recommended appointment of Mr. R.K. Chibber as the new interim chairman and managing director for a period of 3 months till the time they find a new chairman. And also, immediately after the earlier chairman was removed, there were raids conducted on the premises of J&K Bank, and there are allegations of malpractices at the bank, of lack of governance practices and terror funding, money laundering, etc. So all that is being inquired from the bank. And so today morning, the management had a con call wherein even the new chairman was there and tried to address various concerns of the investors and various other stakeholders. So he said that basically the change of guard has been done mainly on the back of complaints received with regards to malpractices at the bank, and this is an attempt to improve the overall profitability at the bank. So going forward, they will aim to promote higher transparency at the bank, and they've also decided to implement preventive vigilance at the bank. They'll also try to strengthen the accountability mechanism, and they've decided to split the position of chairman and managing director in order to improve the governance practices going forward. But this is not a new instance that has happened at J&K Bank. In the past, past as well. In Q2 FY11, we saw a similar thing happening with the replacement of Mr. Hasib Drabu, who was at that time the chairman. And if you look at the financials that panned out under Mr. Parvez Ahmed, the bank has only improved. So there's nothing fishy on the face of it when it comes to the financials, because they turned around from loss of 600 crore rupees at the time when he took over to a profit of about 215 crore rupees that we saw in the last quarter. Even the NPAs came down for them. The provisioning coverage ratio improved. So he showed up the provisioning coverage ratio in the first 2 quarters when he joined, and after that it has remained at the similar levels. Overall, when it comes to financials, there is no problem, but we'll keep an eye on all these allegations which have been made against the earlier chairman and the overall bank.
Okay, Shefali, thanks a lot for bringing all those details. Well, she was mentioning there was no problem with the financials under the former chairman, and also looking at the stock, it's not fallen on YTD basis. The stock's up actually 37 to 38%. It's recovered from the lows of the day, which was at 47.5 was the low, and now the stock's still sitting with major losses of about 12 to 13% right now. But Sameer, on year-to-date basis, one has seen stock price appreciation, and Shefali was highlighting the financials too have not deteriorated.
Yeah. So, see, first of all, I had always a negative view on it because it's a very, let's say, a post is very politically influenced, whether the current government or historically, if you see, it's been always the scenario, as she mentioned, that, you know, it's been changed earlier as well. And the new government always blames the current MD and removes him. So I think it's always a little kind of area which I really don't like to enter, because even if you see the branches, they are more state dominated. Now in that state, the industrial part is hardly anywhere there. So the corporate and the MSME end of it will be a little fishy in a certain sense. And the retail doesn't really pick up for the bank that much. So I think it's better to stay away. And even if it's giving you profits right now, I think it's better to get out, because if the previous management is blamed too, there might be a certain cleanup which might come in forthcoming quarters, and there might be a more stringent kind of a provisioning or some kind of falls can come up. So I think it's better to get out if you're getting a chance and maybe re-enter once the things settle.
Okay. Stay on, gentlemen. So much more to talk about, but we were trying to figure out which are the companies that have given a very good performance in the quarter gone by in terms of quarterly numbers, and then try and assess what the outlook would be after the mainstream companies have already been spoken to. TD Power Systems showcased a good operating performance in the fourth quarter. The company saw an expansion in margins along with a rise in net profit as well. Stock is up about 15% from the start of the year. Let's discuss the company's growth prospects with Nikhil Kumar, who's the managing director of the company, joins us right now on the show. Nikhil, good having you. Thanks so much for joining in. Can you put that quarter into perspective? Would the good showing in quarter 4 be followed by an equally, if not more robust show by the company in FY20?
Yeah, generally, the last quarter is always a really good quarter for companies in the capital goods sector, and we are no exception to that. So what tends to happen is that there is a bunching of sales that takes place in the last quarter. But I think, more than looking at the quarter performance for us, we had a really strong order book last year, which was up by about 30% compared to the previous year. So we're seeing a continuation of the strong order flow even in April and May this year. So overall for the year, we will deliver our best numbers. This is the projection that I have made so far, even on the earnings call.
Okay. No, so am I understanding you correctly? You're saying that FY20 would arguably be one of the best years that you've clocked in your listed history?
Yeah.
Okay.
Yeah.
That would be only in terms of the revenue numbers, or
revenue and top line definitely, and we'll have a dramatically improved bottom line compared to the previous years, but it may not, in terms of EBITDA margin, we won't be where we were in 2012, partly in terms of percentages, but we will make up for that by just an increase in the volume of sales. So just to put it in perspective, for example, in 11-12, we had our best EBITDA margin, something like 17-18%, but we had 400 crores of sales. This year, we are given a projection of something close to 500, and we'll have EBITDA margins between 12 and 13%.
Okay. You just spoke about the order book looking robust in the month of April, May, if I'm not wrong. Can you give us some color there? And also, I believe the gas generator segment, there are some talks of multiple customers being enrolled. Any color there?
Yes. So we have a marquee customer who was taken over last year. So we had a little bit of dip in business from him last year. But this year, their sales has increased, and so has the order inflow to us increased. So we're seeing a robust order inflow in the gas engine segment. We have also added 2 new engine customers. Both are, again, equally big as the one that we're currently working with. Although those will be trial orders this year, we actually be delivering the first machine this week. Then we will see increased volumes from both these guys taking place next year. This is our customer acquisition cycle is typically a 2-year to 3-year acquisition cycle.
Hi Nikhil, good afternoon. Since you're expecting good growth rate now to come by in FY20, last few quarters have not been that good for a company like yours. Tell us, what's the capacity utilization? What was it towards the end of FY19? Will it go up now in FY20?
Yeah, so we have a capacity of around 700 crores of manufacturing. Last year we did 400, so that is somewhere around 57-58%. This year we'll be at 500, so that's now already reaching somewhere around 70%. Next year we'll have an increase of around 50 crores coming in from the railway business. So even if we keep the remaining business the same, we go to 550. But we will definitely see at least a 10% growth coming in from our regular business, which means we should be somewhere around 600. So 600 by 700 is about 6 by 7, which is something like 80+%. That would really give us a good leverage on operating margins.
Okay. Coming to your buyback, which you recently concluded this year, and I believe the promoters did not participate in that buyback. Are the promoters looking to buy shares from the open market now?
Yeah, we were not allowed to buy we were not allowed to buy in the buyback. So we had a blackout period before the buyback and after the buyback also. So we were not allowed to participate. But I have picked up some shares already in the market after our blackout period is over, and I will continue to keep acquiring shares.
Okay. I think the limit that a promoter can acquire from the open market in a year is 5%. Do you look to exhaust that? Could you just give us a range? What sort of
I don't think I'm going to go that far.
Okay. No problem, Nikhil. Just coming to what is the cash on the books now, and how do you plan to deploy that cash going into FY20?
We have 130 crores of cash still on the books. Once we start generating money like we will start doing from this year onwards, we will probably keep this 125, 130 crores where it is. But all the cash that's generated above that, we have options to do another buyback. We have options to increase the dividends to suppliers. We also have some options to just increase our capex to just to go in for more automation, to prepare ourselves, prepare our factory for the future. So I think it's going to be a combination of making really smart investments in our factory to keep ourselves on the cutting edge. Maybe we'll do another share buyback, and I guess we will also try to up the dividend a little bit. So it's going to be a combination of these 3 things.
Buyback of the same size that you did last of about 30 crore, or it can be higher than that?
Let's see. I mean, I think it doesn't make sense to do something less than that. So somewhere around that number should be something that we have in mind. I can't give any commitments about that right now. We have these things in mind.
But do you have any timeline in mind for that?
Well, there's a 1 year, so we can't do this for the next 1 year. So we can only do a buyback once a year.
Okay.
We just finished our buyback last month. So somewhere around this time next year, we'll be taking a decision about it.
Okay, but if I'm not wrong, there's a co-promoter, a Japanese co-promoter in TD Power. What's the part?
There are 2 co-promoters. There's one Japanese and there's also another Indian person by the name of Mohit Kiricha. So,
long term, or would there be? Yeah, my question was that are they committed for the long term, or are you guys, or are you or any of the other partners looking to buy out any of the other partners?
No, I think we're all committed to be here for the long term. None of us are planning to sell any shares in the moment. And of course, the value is also, we don't think the value is reflected in the stock price right now. So it doesn't make any sense for us to buy or sell right now. We're also seeing an uptake in the business after a long time. And we're also seeing ourselves, getting more firmly positioned internationally, and we're seeing more stable business coming into the organization. So as promoters, this is the time to hold on and to, in fact, acquire more shares.
Okay, we wish you all the best for that, Nikhil. Thanks much for taking the time out and being with us.
Thank you.
I must say, you don't usually hear managing directors speaking about the time to acquire more shares from the open market. Interesting comments there. TD Power has done reasonably okay this year, but the quarterly performance was pretty interesting.
Yeah, Neeraj, the stock is traded around levels of 450, I believe, in somewhere about 2014. And if I'm not mistaken, it's also trading way below the IPO price, what it was. Last a buyback happened at 256, I think, which was somewhere around the IPO price as well.
Yeah, 5 years performance certainly has come off, but I just find that commentary a bit interesting, for lack of a better word. Nevertheless, any chance? Any views here on TD Power? No, not really.
Not really.
Okay, leave it. Just looking at stocks which are in focus today, Sumeet, one, while we spoke about the large caps, one stock that's come off today is Deepak Nitrite, 8% lower.
Yep.
Now, the Economic Times spoke about how the spreads have come off. We were looking at the spreads. I don't think there has been a dramatic change on a quarter-on-quarter basis. So what is this fear factor of a big news flow impacting the stock on a particular day, or do you believe there is merit to this fall?
So I think whatever it is, it's helping at least me. So because see, I already hold a position, and I believe the fundamentals are playing out really well. And even if you read the article, it says the spreads have reduced in past 6 months, and the prices have reduced in past 6 months. So I think past 6 months, even the capacity wasn't online. And now, even if you see the prices and the imports, so if you see the import data, quantity-wise, phenol and acetone, which is the new capacity they've kicked in, quantity-wise also they have dropped 30% as an import. So somewhere imports are going off, and I don't think so the spreads coming out, because the landed cost is also there, the duty is also there. So there's a lot of factors and logistical issues which I don't think so the clients really want to shift between when the contract is already there. And the contracts are signed for long term. The capacities don't come in because you have a short demand and you want to enter the contract in for 6 months. So I think these are more of overplayed news, and I think it's a good opportunity to enter this stock.
Shouldn't we have seen that if indeed that's the case, it's a well-researched stock, if indeed there was no fear and no earnings impact, then there should have been some buying that would have come in, right? We haven't quite seen material buying come out.
No, if you see NEC delivery, that's what I tried. Now they give you even during the day kind of delivery. If you see NEC delivery, that's around 7 to 8 lakh shares today. That if you go back in time past 3 months, 9 lakh has been the top. So after long, you're seeing 8 lakh, 8.5 lakh delivery today. So that means that someone is buying in a bigger sense, and that again the price was around 285 to 60 or 285 to 90. So somewhere the price has come off the same place. And otherwise, if there was that genuine fear or that genuine situation, I think then it would have been a 10 to 15% kind of a fall.
And not a 7%.
Because it had already run from 220 to 300 kind of levels. So I think it's a better place to buy in. Even if there's another 10 to 15% kind of fall, it's always to buy these stocks in tranches rather than one-time investment.
Sure. Hemen, quick thoughts, Deepak Nitrite on the charts?
I am positive. Maybe this correction is a bit surprising, but longer term point of view, we moved between 206, 300. We took a year to do that. We gave a breakout and we slipped back. I don't see any logic except that we moved from 205 to 338 one way. I'd say 380, 400 in the next 1 year.
Okay. Well, so our experts, fundamental, technical, sanguine on the prospects of Deepak Nitrite. Moving on, non-equity mutual funds showed lower inflows in May, with the total assets under management rising only marginally last month on a month-on-month basis. Yash Upadhyay spoke to AMFI's chief executive Ines Venkatesh to find out what the industry is making of this trend.
The positive trend of somewhere around 76,000 crore coming in as a inflow into the mutual fund industry. The mutual fund industry is showing somewhere around an average or a month-end AUM of somewhere around 25,93,000 crore. That is 26 trillion rupees is the size of the industry. Right. That is a very, very positive sign to look at it. The equity flows have started showing some sort of a rebound compared to the previous month. There is an increase, marginal increase in the equity funds. But whatever the variations that you have seen is mainly because of the liquid funds. So liquid funds are always volatile. So to that much extent, last time the liquid funds was somewhere around 96,000 crore. This time it is around somewhere around 70,000 crore. So that will have an impact on the overall AUM flows that are coming in. The credit funds, if you look at it, the credit funds have shown negative outflows there. Right. That has also pulled on, but it is not very high negative outflows, somewhere around 1,200 crores, 1,400 crores, those sort of outflows are happening. But I would say that overall, I would say that the mutual fund inflows are positive. It is doing reasonably well, and we believe that this trend will continue. On the debt side, the pain, we'll have to wait and see how the pain pans out, especially on the credit side, credit fund side. But otherwise, if we look at the way in which the monetary policy has turned its stance from neutral to accommodative, followed with a rate cut, I would say that this is the right time to stay invested in the gilt fund and also in the high quality income funds.
Right. So just wanted a word on the certain categories which fall under the income and debt oriented schemes, like the credit risk fund category, which saw outflows of more than 4,000 crore rupees. Some short duration as well as medium duration funds, they too saw outflows in excess of 1,000 crore rupees. What do you make of this? And given that the sort of news flow that has come in on DHFL and other entities with the stressed assets, overall the debt side, which contributes the most to the total mutual fund industry flows, would according to you be suppressed for the next couple of months from here on?
No, but these funds, whatever we are talking about, those type of funds, I don't think they form a huge part in the overall AUM. The overall AUM mainly is driven by the liquid funds. Okay. And in liquid funds, the fund flows are intact. So we believe that the funds flow will continue to remain intact over the next couple of months. We don't have any sort of thing. But having said that, yes, there is a pain which has happened in the credit funds or the ultra short-term duration funds and those sort of things, where maybe I believe that the investors will reassess their situation based on the credit event that has happened and then take a call as to what he needs to do in the future.
But also, if you could help us understand how has been the traction in the balance fund category. We've seen 4 consecutive months of negative outflows. What was that number, if you could help us with that, in the month of May?
Essentially, this time also there is a negative flow in the balance funds. It is coming out of, I would say, the dividend factor. So hopefully we believe that in this budget, if let us say the government looks at promoting savings through the mutual fund route and corrects that anomaly of that fund, the dividend way of taxing the dividend in the mutual fund industry. If that happens, then you should see much more positive traction happening in the balance funds.
Right. So notwithstanding the fact that the previous months saw new fund offers in both the multi-cap as well as the small cap space, the mid and the small cap schemes, they have seen consistent inflows of more than 1,100 crores for a second consecutive month, at least because of the classification that we have nowadays. Is there a transition that you are seeing in the investor mindset or the investor psyche that more money is being deployed now to the smaller cap and the mid cap schemes?
I would say that as they have started looking at the mid cap and small cap funds, because the valuations look a little bit attractive, because last year there has been a huge downward revision in the valuation by more than 50-60%. Right. So I think they look at this is the right time for them to re-enter that space. So that is where I think you are seeing those flows coming into the mutual fund, especially the small cap funds and the mid cap funds.
Well, let's see how this scenario shapes up as far as the mutual fund inflows go. Now, before we take in our final question with Sameer Kalra, let's take it to Sharad Dubey, who's joining us with the list of the Fab 4 stocks of the day. Sharad, Good afternoon.
Good afternoon, Neeraj. The first stock is DHFL. Of course, it has been pairing gains and it rose as much as almost 7.2% today. After it's on the Friday itself, it came out with a notification that it paid investors around 276 odd crore rupees for the payment of its principal and interest obligations towards NCDs. Up next, we are having L&T, which is up almost 1.13% after it gains on a large order win, which could be valued between rupees 2,500 to rupees 5,000 odd crore rupees. So these orders may include EPC orders from water and waste treatment effluent plants, and also transport infra orders from Mumbai and Delhi. Also, one order is there for the power and distribution sector with the commissioning of around 80 million watt power in UP. Next, we are having Web of Global, which is up almost 8% after hitting its 4-year high, and the RSI index going above 70, indicating that the stock may be overbought. And the last stock for the day is Manappuram Finance, which is up almost 4.7%, as fresh longs has been seen with a high open interest of 20% and volumes trading at almost 1.5 times its 20-day average. Back to you.
Okay, thanks a lot, Sharath, for bringing those Fab 4 stocks of the day. Well, before we thank Samir, pull up ITC, that stock's in heavy weight. And remember, this has been an underperformer. If you compare this stock, the sort of returns it may have given you in the last 1 year, 2 year, be it 3 years. Samir, Morgan Stanley had a report today where they've said that the pricing power has come back, but I think they always had the pricing power. And there are some brokerages channel checks suggesting that they have increased the prices for one of their cigarette. What's the outlook? I think there's a GST Council meet now, which meets on June 20th. Last 22 months, there's not been any revision with regard to the cigarette taxes.
So I think they'll keep it in the highest tax. I really doubt that they'll try to change that level. In terms of additional tax, they might even think of doing that. And that's why you might be seeing ground checks giving you a price hike preemptive. And it's best, I think, because now we are running into the actual full budget. It's good to buy before the budget and sell a couple days after. That 300 beyond 360 to 360 levels, 340 levels, I think that can only be supported when the whole movement happens beyond 300, 310. Because otherwise the pricing power, as you said, was already there. That's why they were able to manage that 45% taxes and 50% kind of level of taxes. But the problem is now if even my channel checks tell me that Godfrey Phillips is trying a small one, so trying with a small cigarette. Now, if that comes to the market, then ITC has a trouble brewing at their volume end, which is coming to 7 to 8% right now. So that might change the game, but I won't give a lot of investment value right now to ITC.
I guess that makes a lot of people really not looking to do that. Samir, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Samir Kalra with his thoughts on a number of topics, I must say. As we look at stocks which are correcting, Ad Labs, Gen Irrigation are amongst those which have corrected big time. Eros is down 10% as well. McLeod Russell another 9.5 or 10%. UFO Movies 9.5%. Dilip Buildcon 8.5%. So a lot of stocks which have corrected very, very strongly. Actually, Sumeet, coming on Dilip Buildcon, what do the charts suggest here?
See, the stock is, has given us some correction in last 3 to 4 days time horizon. There is a possibility that some more correction can be seen in the counter from present levels. 458 is the current market price. The stock for the support is placed somewhere at around 425 levels. Downside, there is a possibility that we might see a move till 425. If this stock is not able to hold the supports of 425, then the further sell-off can be seen. And if the stock is able to hold the supports of 425, then there is a possibility that we might see pullback or bounce back from the levels. And on high side, it has resistance at around 475, 480 levels. Once these levels are taken away, we will see a good upside move. Till the time these levels are not taken away, it's better to avoid long positions, and the counter is looking weak till 425 levels.
Okay, let's get one more fundamental voice. Dharmesh Kant of IndiaNivesh Securities with us on the show. Dharmesh, good having you. Thanks so much for joining in. This morning, or rather this afternoon, we were talking about how selectively some NBFCs have done well. Manappuram and Muthoot, both gold financiers, have had a really good run, have seen FPI money coming in, if I'm not wrong, and they are trading higher today after that Friday scare that came into Manappuram. Do you guys at IndiaNivesh have some coverage here?
Yeah, good afternoon, Neeraj. No, we don't have a coverage on these NBFCs which you have mentioned, Manappuram and Muthoot. And for the time being, we as a house view, we do think that we should be staying away from NBFC's plays for at least a month or so till more clarity on the regulations and how the things are going to shape up, how the RBI is going to regulate, and what are the norms which will be laid forward is being clear. Because as of now, things are not very clear on the regulation part because new regulations are about to roll in. So once they are there, then we can take a call. On the business front, cost of funds are low, so the margins will definitely go up, and most of the businesses do look attractive to us.
Okay, for the time being, both these stocks are sitting almost at day's high with good amount of gains between 4 to 4.5%. Hi Dharmesh, good afternoon. The FMCG pack is up and about in today's session, and there is a lot of hope that there will be some sort of rural stimulus be announced in the budget. And we've seen in the quarter gone by, because volume growth went down, the rural growth from for a company like HUL, which used to be 1.3 times the urban, fell to about 1.1. Do you see any sort of revival in the rural growth going ahead, and what should be the good play in case that happens?
Yeah, good afternoon. You see, rural growth has been the modus operandi of the existing government, and that is what they have been targeting on. And all these schemes on all the budgets which were there so far was pro rural and semi-urban areas. So we think that the continuity of the same will be continued this time as well. What is to be taken note of is how the monsoons are going to pan out, because that would be critical for any substantial and sustainable rural growth to set in. If the monsoons, the way it is being coming up, there are no doubts being raised on the normal level of rainfall throughout the country. So if there is any derailment out there, so no matter whatever stimulus you give, it will be wiped out. So, but having said that, considering how the things are shaping up and being on the optimist side, on the positive side, that things will pan out in a normal way, FMCG space does look very attractive, especially in liver, because the things have rolled in favor. The input prices have come down. They have been able to target the competition very well, and they have been able to make inroad. Earlier the volume growth was not there, but thankfully for last 1 year they have been able to deliver on the volume growth front as well. Maybe last quarter it was not that great, but the volume growth was definitely there. We do think we have a buy recommendation on Hindi liver, and our price target for the same stands very tall. It's around 2150 kind of a price target based on FY21 earnings estimate, and that would be the outlier in the pack. Other than this, one has to be very selective. I don't think Dabur or Bata can have sustainable, meaningful returns from where they are trading as of now. So we are sticking with HUL in the space, followed by Marico.
Like HUL and Marico, in fact, positive commentary also coming in from the analyst meet of HUL, where the focus will be around digitization and premiumization. Remember, HUL's market share in the premium products is 30% higher compared to the others. So right now, HUL sitting with gains of 1.2%. It's also trading, by the way, very close to its all-time high levels. Let's move on and talk about stocks which are likely to enter into the F&O ban for tomorrow's trade, and stocks which may come off. So Reliance Capital is the one which has been beaten down. And today also the stock seen a lot of fresh shorting coming about. In fact, if you look at the overall open interest as a percentage of market-wide position limit as on Friday, it was just about 90%. For a stock to enter into the ban, it has to breach the 95% mark. And as of now, today's data indicate it could breach the 95% mark, and the stock's also trading with cuts of about 8 to 9%. What may come out, though it's not reached the 80% mark, and that's Divan Housing. As on Friday, it was 88%. For a stock to come out of the F&O ban, it has to go below the 80% mark. As per the recent data, I think it's somewhere about 82 to 83%. Just thought of highlighting in case in the last 10 to 15 minutes the trend do change for this one. Hemen, very quickly thoughts on these two stocks, Reliance Capital and Divan Housing.
Reliance Capital, frankly speaking, it's a bottomless pit. No need. One would have thought it would have stopped at 100, didn't. So continues, lower top, lower bottoms. I don't think one can look at something. Divan Housing seems like a dead cat bounce. Bearish gap which hasn't been covered. Oversold but still weak. I wouldn't short them though, but complete avoid.
Okay, avoid both these counters, and Dewan Housing probably could be up because of short covering in today's session. But other than that, I think it's the IT pack also which is doing well. Tech Mahindra, TCS, Infi, all of them are up and about. The Nifty IT index is your top sectoral gainer also as we speak. Infi is up almost 2% in trade, and you've got Tech Mahindra, Nifty IT up almost 1.5%. Okay, let's move on. It's time to take a look at what the dealing rooms are recommending in trade today, and we've got Darshan Mehta joining us with his channel checks. Hi Darshan, good afternoon.
Hi, good afternoon Navneet. Deepak Nitrite is one of the stocks that's been spoken about. Spoke to a few of the people that some of the HNIs that actually hold the stock, and they are indicating that they are accumulating this counter at lower levels. They believe that the spread hasn't actually dropped significantly from the last level. It's pretty much stable. The last time the spreads were much higher on account of crude, and when the plant was actually being set up, the management has said that they will be making money if the spreads are in excess of $400 to $450, and the price currently is much higher than that. So Deepak Nitrite is something that they're speaking about. Specialty chemicals again looks good. SRF coming close to the 3,000 mark in trade. Some of the domestic funds have been actively accumulating ever since the news of the Gujarat plant clearance came out. The counter has been looking rather strong, and it has gained significantly. And finally, among the Nifty stocks, Bharti Airtel is something that some of the domestic funds have indicated that they are nibbling into today.
Okay, Darshan, thanks so much for putting perspective into all of those names, and not surprised that two of those names find mention amongst the top conversations on dealing rooms. The other set of stocks which are looking slightly wobbly today are these set of companies, Hemen, that there's a fear that the Norwegian sovereign fund might go out and sell, right? So Coal India down about 2.5%, ONGC is down, GAIL is down, OMC is under pressure as well. But there are specific names, ONGC and Coal India mentioned in that whole report as well. How do the charts look here, specifically for Coal India and ONGC?
I think coal doesn't look that bad, but 230 to 270, that's like climbing Mount Everest for something like Coal India. It doesn't happen in years. So, but we are at 250, we are at 258, 256 is where we have support coming in. Extreme near term, nothing changes, but yeah, we've gone up for 5 weeks in a row, so it's tired. It could come off further. I don't see it tanking, not yet. So the picture doesn't look like that. ONGC, yes, I think not looking good. We've not formed a rounding top, but it looks like a distribution pattern. 162 is important. I think if this was a Friday, I would have told you, Neeraj, that we formed an intermediate peak, but we're on the verge of doing so if we haven't done that already. So ONGC is distinctly weak.
Looking distinctly weak for sure, and OMC is still looking slightly wobbly. BPCL is the top loser on the Nifty today. Dharmesh, any thoughts here? BPCL, IOC?
Not really. These are all cyclical trading plays, and I think after the huge run-up which these stocks have seen, some profit taking is happening, and the market sentiments are also not favoring a bull run. And crude has been very volatile, so the gyrations from $50 to $65, $66 is what NYMEX has been doing. And keeping that in mind and the currency into perspective, I don't think these plays merit our investment buy. At the best, they can be trading plays, and that too on technicals rather than fundamentals. So fundamentally, I don't see HP, BP or IOC to be a long-term buying bet from where they are trading as of now.
We'll talk about some of the fundamental plays, but just before we get in closing strategies, Hemen, the ADAG group stocks, Navneet was talking about how there's a possibility that capital might enter the ban. Reliance Infra is 13% lower. Capital is still about 9% lower. Power has actually not corrected as much and has recovered a little bit of lost ground. What do the charts suggest? What are the levels that these stocks can go to if you think that there are lower levels in play here for capital and infra?
Capital, okay. Infra, I guess we are not far away, but we are heading towards 48 or 50 for infra. And as far as Reliance Capital is concerned, Neeraj, I think, one sec, we were 140, yeah, I think we are heading towards sub 75 and maybe, yeah, possibly around the 65 level.
Okay, and let's now double it up with your closing strategies. So if I can come to you, Hemen, first, your top closing strategy.
Top clothing strategy, Neeraj, would be a BTST basically. I wouldn't have an STBT, but few stocks which look interesting. I guess I would have an Amara Raja battery as a BTST.
Okay, a BTST on Amara Raja, which is up about 2.5%. Maybe Hemen will give us one more in due course, but for now, Amara Raja seems to be one stock that he seems comfortable from a BTST play. Sumeet, your top closing strategy.
Godrej Property looks good to me. Godrej Property has given a good move today, and from here on there is a possibility that we might see upside move in next couple of days. 900 is immediate psychological resistance for this stock. Once the levels are taken away, we can see move till 920, 930 levels. One can initiate long positions in Godrej Properties at the current market price, with a stop loss to be placed at 880 on lower side for the upside target of 920 and 930 levels.
Okay, that's a buy on Godrej Properties. Hemen, do you have any more picks?
Yeah, a BTST also on Hindalco.
Okay, levels?
Here at 198, slow mover, 2 and 4, 196 stop loss, 202 target.
Okay, BTST on Hindalco, the stock sitting with gains of about 1.5% to almost 2%. Dharmesh, what's looking good to you? Markets have seen some bit of correction. In fact, a sector like cement, which was doing well last week, saw some bit of correction. Is there anything from this space that you like and you would like to pick up at lower levels?
Yes, cement sector does look very attractive because the volume growth will definitely be there. And as per the announcement of Road and Transport Minister, so the kilometers built per day is going to increase substantially, and that will again lead to cement consumption. So cement consumption will primarily be driven by all infra and construction activity happening from the government side. Private construction is still to pick up. So but this will have 8 to 10% kind of a volume growth happening pace, and we are building in a 1 to 2% kind of a realization uptick as well. So overall 10-12% kind of top line growth is what we are penciling in, and the input prices are benign as of now. So Ultratech looks very attractive to us, and followed by Shree Cements and JK Lakshmi Cements. So these are the top 3 picks from our basket. But overall we are very positive on the space, be it mid cap or a large cap cement space. So that is one space in this volatile market. Any corrections, these stocks can be accumulated.
Okay, let's see if the volume growth momentum, which one has seen in the last 8 to 9 quarters for cement companies, can continue going ahead or not. I want to pull up Bata India. We did mention in our F&O check, the stock's up. In fact, it's trading very close to its all-time high levels. Both price as well as open interest action has been seen here. The stock is witnessing fresh long positions in today's trade. 14.18 Hemen. Would you bet now at current levels, or would you stay away? And also, if somebody's taken a long position, what should the target be?
Disclosure, I have a holding in Bata for the last 15 years. Bata is in a multi-year uptrend. I think that since 2004, Navneet, we've walked through consolidation, and now 1300 and 1400. Now we've broken out from there. We are heading towards 1480, probably going towards 1600 odd. 22% long build up today, but that's from a shorter term point of view. But we remain in a long term uptrend which still continues, Navneet.
Okay, that's Bata India up almost 3%. The other one which is doing well is MGL, that's Mahanagar Gas. Sumeet, would you trade this on the upside? MGL today has seen gains of about 4 to 4.3%, now sitting almost at day's high.
Yes, yeah, it's looking good, and it is trading near 200 DMA levels, that is 888, 890 levels. Once the stock is able to break the resistance levels, then there is a possibility that we might see a move till 905 or 910 levels. I think a closing above 200 DMA in MGL will increase the momentum, and stock can perform in next couple of days. Upside 910 and 930 can be the targets for next couple of days. Those who have taken long positions, they can hold on the existing long position, and one can go ahead and initiate fresh long positions at the current market price, with a stop loss to be placed at 870 for the upside target of 910 and 930 levels.
Okay. Dharmesh, one final question from my end, and that is on Yes Bank. Now, I understand that HDFC Bank and the others might be better bets to bet on, but the price is a factor all the time, the valuation, perceived valuation all the time. At 136, does Yes Bank provide that?
Yeah, Neeraj, you have put it very beautifully, perceived valuation, and that is the trouble. So the valuation which is there of the Yes Bank and the type of news flows which are surrounding it, doubts are being raised whether this valuation can still hold. And the way things are happening, because since they are not on record, it's very difficult to point it out. But even a double-digit kind of a price cannot be ruled out, because the NPAs are beginning to hurt, and the exposure to the groups like SL and IIFL, DHFL, which they have, if they start hurting them badly, so there would be a lot more to reckon with. So I think the best suggestion as of now is to stay away from Yes Bank. If you have been holding and you are stuck, so give it more time before this entire mess is cleared out, but no more fresh buying into Yes Bank. So we are staying away from that.
Okay, stay away from Yes Bank. That's the call coming in from Dharmesh. We'll leave it at that. No, thanks a lot for joining us today, Dharmesh, and taking us through your views on the markets and also a couple of the individual stocks. And talking about some stocks, pull up the chart of Greenply. That's gone up, I think, 5% in trade just in last half an hour or so. It's seen gains of about 5%. Very quickly, Hemen, on the charts, would you take a bet? I think it's another beaten down counter. Greenply is the stock we're talking about.
I think so. High risk because mid caps don't do anything these days. But stop loss 157, breakout at 172, possible 185.
Okay, Jamin, stay on. We'll take in closing thoughts from you. But here's how we're shutting shop. Disappointing for the Nifty Bank, though I must say it's not ending in the red, or not looking like ending in the red, which is not a bad sign. 0.5% for the Nifty and the Sensex, but frankly, it didn't seem like a day wherein we're just ending with a 0.5% gain, because a lot of casualties at the broader end of the spectrum, and the market breadth is not positive too. The mid cap and the small cap indices will come up on your screen next, and the BSE 500, and you will see there 0.5% down for the small caps, and that was the problem. A lot of these stocks came off very, very rapidly. The confidence of the market not quite there when it comes to the bullish signs. But we'll talk about the mid caps and the small caps in a bit. Let me dwell on the large caps first and what's moving and what's not there. So Britannia 3.5%, then IT. It was an IT day of sorts. TechM, TCS, Infosys out here, all of them gaining reasonably okay in the session today. Some strength for ITC, some strength for HCL Tech as well, the other IT names. So a bit of a defensive bet to the market. What's not done well? Oil and gas, and maybe the names of companies in the Norwegian fund list. So Coal India, GAIL, ONGC, all of them down. Oil marketing companies down. Tata Motors correcting, Z correcting, HDFC corrects a bit in the session today as well. So a diverse set of stocks went down in the session today. But the indices still ended up 0.5% higher. Not quite for the mid caps, more so for the small caps, which are down about 0.5%. Navneet,
about individual stocks which went up first. Dewan Housing saw some bit of short covering after falling last week. That one saw a good amount of gains in today's session, in stake in this one for the last 3 quarters. Web of Global went up in trade. The stock was up about 8%. It also touched its 52-week high in today's session, 7% higher, closing around the mark of about 821. Greenply, a beaten down counter just in the last half an hour of trade. This one saw some bit of buying, but closing around the mark of 165 with gains of about 4%. The entire consumption pack was up. You had the Nifty FMCG index, by the way, which was one of the top sectoral gainers. So Jubilant Foodworks, Bata, which is trading very close to its all-time high levels. In fact, on the futures side, Bata also witnessed a lot of OI build-up on the long side. So both these stocks did pretty well. Bata finally closing with gains of about 3%. On the losing side, starting off with the Anil Ambani companies, Anil Ambani Group companies, Reliance Infra, Reliance Capital, both of them were beaten down in today's session. 13% lower for Infra. Remember, the earnings have still not come out. Capital down almost 8%. Let's see if that moves into the ban or not. Dish TV was the other one, which was weak, so selling continues here as well. Dish TV closing around the mark of 26 to 27, down almost 5% in trade. Jain Irrigation touching fresh lows every day. Today, the stock was down about 13 to 14%, finally closing around the mark of 37. J&K Bank, which opened with deep cuts of about 19 to 20%, finally saw some bit of recovery and closing with cuts of about 13%. And finally, PC Jeweler, this has been in the F&O ban, but today there was some bit of unwinding seen, and the stock saw selling off about 13%, closing around the mark of about 54, Neeraj.
Well, so interesting afternoon of trade. Let's take a look at what's moved and what's not. So we already discussed the movers and shakers. The market breadth will come up on your screen next, and not the best of days from market breadth perspective. 2:1 in favor of the declines, or just around that. So 2:1, just narrowing a little bit, but not the best of days in terms of the market breadth. And I reckon the turnover as well would probably belie that, because we will have at least the F&O turnover being high. Cash market lower actually than average.
It's very low. In fact, we've seen that average of somewhere between 30,000 to 33. So for the NSE cash, it's really low.
Yeah, but the F&O turnover, pretty interesting and very high today. Interesting. Let's see. Maybe we'll try and analyze what the ADAG group F&O turnover was all as well, because that could have been higher at the session today.
It's the last month of trading in the F&O for them.
That too. So that's the other bit. And then, of course, let us also bring up the contributors list. Maybe IT stacked up on the gaining side. Actually, no, none of the IT stocks out there, because the heavyweights made their presence felt from the banking space.
Yep, HDFC Twins contributing nearly 24 points, and ICICI Bank and State Bank of India were the other ones. And what capped the moves was Reliance Industries and stocks like...
yeah, but I think these rates seem to be a bit off. Maybe we need to...
because I think Infi TCS registered good amount of gains.
I think this graph is a bit... There's a mistake here, but we should just quickly get the MRR or the heat map up, and let's tell you what really did well, because frankly, it was all about what happened to IT. And right here, as you can see,
Tech Mahindra, TCS, Infosys, one of the top gainers, in fact, on Nifty today. And out of them, I think TCS and Infi are the heavyweights.
Yeah, they should have been there. We don't quite see the HDFC
something like
ITC
that should have featured, in fact.
Yeah, anyways, so small issues out there, but doesn't matter. The point remains that it's been a lackluster day of trade with a 0.5% gain. Final thoughts from our experts. Sumeet, Bagadia, the small cap index, which has corrected 0.5% again today. If you can look up those charts there and tell us, how does that look?
We feel that the first move will be in the frontliner stocks, in the large cap stocks. We feel that it's better to avoid long positions in small cap and mid cap at present levels, because at present we are seeing some consolidation in most of these stocks, and from here on we feel that first large cap stocks will move up. As far as your technical levels are concerned, it's trading near the support levels. There is a possibility that we might see a range bound move for next one or two weeks.
Hemen, your closing thoughts, and whether you believe that the broader markets could succumb to further selling pressure, because the small caps were definitely under a spot of bother today.
I think so. See, frankly, we need a Jan 18 and year. They've been beaten down so much. One would think that shouldn't be too much of a downside. But if the mainlines falter, I don't expect the mid caps to outperform. So some of the daily mechanical indicators, like the MACD, have signaled a sell on the Nifty, Bank Nifty. Okay, VIX has come down as expected after the credit policy. We are seeing a bounce, a retracement, a correction of the fall of 350 points. I don't think there's too much of an upside. I'd be unpleasantly surprised if we make a new high. So on a bounce, I'm not saying there's going to be a crash or something, but a negative bias is on the way, because we are stagnating. And if it stagnates, it'll finally fall under its own weight.
Okay, on that note, we would like to thank both Hemen as well as Sumeet for joining us today and taking us through their views on the markets and also some individual stocks on the technical side. But with that, it's a wrap on this edition of Countdown. It's goodbye from Neeraj and my side and the entire team who put this show together. But stay tuned to Bloomberg Quint. Bloomberg Quint's Market Wrap comes up next.